You know that feeling when Melbourne's weather flips from sunny to pouring rain in 5 minutes? That's exactly what the crypto market did this week. Bitcoin's been hammered, and it's got everyone from Collins Street traders to my mate in Broady asking the same thing. Is this the big one or just another storm we ride out? I'm Sash from CRYPTOLOGIC, coming to you live from a very cool Melbourne morning, and today we're diving straight into the chaos. No fluff, let's get into it. First up, the number on everyone's screen. Bitcoin is trading at approximately 113,000 AUD, 77 USD right now. Yeah, that's after dipping below 80,000 USD for the first time in months, a level we hadn't seen since mid 2025. Over the past week, we've wiped out massive value, and the trigger? A combo of risk, of sentiment across stocks, precious metal sell-offs, and looming economic uncertainty. But the real pain came from liquidations. Over 2.5 billion in Bitcoin positions wiped out in just days. Longs got wrecked, shorts too in the volatility spikes. It's classic leverage flush. When the market turns, it turns fast. This segment is brought to you by cryptologic.com.au, your go-to hub for in-depth Aussie and global crypto news. Now, zooming out globally, analysts are split. Some, like Compass Point, are calling this the final innings of the market bear or bear market, suggesting Bitcoin could find a floor between 60,000 and 68,000 USD unless equities tank harder. Others point to heavy outflows from US crypto ETFs, 1.8 billion exited recently as proof the momentum trade is unwinding. And yeah, MicroStrategy's stack is feeling the heat with paper losses as BTC tests those lows. But here is where it gets interesting for us Aussies. While the world's panicking, Australia is quietly prepping for a major shift in 2026. The government's Corporations Amendment Digital Assets Framework Bill is set to overhaul things, mandating Australian financial services licenses for digital asset platforms, custodians, and exchanges. No more grey areas for unlicensed ops. It's about closing those regulatory gaps, ASIC flagged as a top risk for 2026. Pre-approval requirements, better consumer protections, maybe even clearer custody rules. If done right, this could unlock institutional inflows we've been waiting for. Think super funds dipping toes via proper channels, not workarounds. All right, time for a quick breather because this market's been brutal. Here's today's cryptologic joke. Why did the Bitcoin go to therapy in Melbourne? Because it had too many support issues and kept breaking down every time someone mentioned resistance. Yeah, I know. That was a dad's joke level, but we all need a laugh when portfolios are bleeding red. Now, let's bring it home with the CRYPTOLOGIC Takeaway. Look, this dip hurts. No sugarcoating it. liquidations, fear, uncertainty. It's the crypto cycle doing its thing. But zoom out. Regulatory clarity in places like Australia is finally arriving in 2026, shifting from Wild West to structured growth. That could stabilize things long term and bring real adoption. Globally, if the bear is in its final stretch, like some say, this could be the shakeout before the next leg up. Remember, I am not a financial advisor. This is just one Melbourne based view. Do your own research, manage risks, and never invest what you can't afford to lose. If you're in this space for the long haul, like I am, these moments test conviction. Stack sats if you believe, or sit tight if you're cautious. Either way, Melbourne's crypto community is tough. We'll get through this. Rain. Hit that like if this helped. Subscribe for more straight up talk updates and drop in the comments. Are you buying this dip or waiting for clearer skies? Until next time, stay sharp, stay sovereign. Sash from CRYPTOLOGIC out. See you in the blockchain.